Since we launched this campaign, it's been interesting to learn that many people don't fully understand what negative gearing actually is and the role it plays in the property market. We've had a few hostile comments on the group website from people saying that taxpayers are funding the property investments of people who negatively gear, or that it's some sort of tax dodge or free money, if you like. Of course, none of these perceptions about negative gearing are really true. In simple terms, negative gearing is the process whereby the cost of owning a property investment, that is the interest on the loan, the rates, the repairs, etc., are deducted from the rental income. And if there's more income than costs, the investment is said to be positively geared. And if the investor pays tax on that net income. If there are more costs than income, the property is said to be negatively geared, and the loss can be offset against other income, and sometimes that can be wage income. This loss is a legitimate tax deduction for any individual to make. As legitimate as a tax deduction nurses might make on a uniform, or one of us or a salesperson in our team might make for their car. It's money spent in order to earn income. And contrary to what some people might think, the government is not cutting a cheque for these property investors, and that all profits, including capital gains, are taxed, like all investments. The tax deduction is critical for many investors to be able to afford purchasing their only investment property. Also, critically, this deduction helps the investor justify the price he or she pays for the property and the amount of rent paid by the tenant. Take it away and the whole financial equation no longer works. Either prices fall or rents need to rise, or both. Interestingly, while it's not being widely advertised, under the current proposal, investors will still be able to deduct their ongoing losses, even on existing properties purchased after July 1 next year. The only difference will be is that people will have to wait until the property is sold to deduct the loss from the profit made on the sale of the property, not against their income along the way. The reality then is that anyone who has significant income outside wages, have sufficient cash flow to carry the loss along the way, will still be feasibly be able to invest in property. The only people who won't be are the mum and dad investors, the 3/4 of people who use negative gearing because they wouldn't be able to afford it if they had to carry the loss until the point of sale. So the fact is, it really makes a mockery of the Labor stance on this issue. They continually talk about how it's wealthy investors with 10 or more properties who are supposedly rorting the system and are going to be stopped by this policy. But in fact, this policy will only make it easier for those investors to dominate the property market.